Swadikap. Good afternoon, and thank you all for joining us at the Set Digital Roadshow. I am honored to present the latest developments from Asset World Corp or AWC, covering our first quarter 2025 performance and our strategic outlook ahead. Today, I'll walk you through how AWC is leveraging our integrated lifestyle real estate portfolio to unlock long-term value through a combination of our world-class hospitality, lifestyle destinations, and sustainable business strategies. AWC is Thailand's leading integrated lifestyle real estate group and a key member of TTC Group. Our business spans three core segments. First is hospitality, with 22 operating hotels and several under development. Second, the retail, with flagship lifestyle destinations across Thailand. Third is the commercial, comprising premium office properties in Bangkok CBD. We operate with the vision of building better future for all by focusing on sustainable growth, stakeholder impact, and customer-centric experiences. Every development under AWC is designed not just for profitability, but also to uplift communities and enhance Thailand's position as a world-class destination. Our strategy is built around two pillars. First is to convert developing assets into operating assets in order to build high-quality operating assets portfolio across strategic locations. Second is to drive EBITDA yield in order to generate long-term EBITDA and asset value growth. At this slide, we deliver outstanding financial performance. AWC continues to deliver high growth and profitability through the strategic expansion of our premium operating asset portfolio. You will see that on our net profit, we achieved a significant year-on-year growth of 23%, increasing from 1,604 million Thai baht in the first quarter 2024 to 1,969 million Thai baht in the first quarter this year. This growth reflects the ramp-up of high-quality assets and efficient operations across the portfolio. On the top right, we highlight three strategic projects that reinforce our premium positioning. First is the Melia Pattaya Hotel. Second, the Verng Nakhon Kasem mixed-use development. And the newly acquired property at Ratchadapisex that we would repositioning into JW Marriott. These assets are critical to our strategy of value creation through high barrier to entry locations and brand differentiation. Moving to asset growth, you will see that our gross asset value or GAV increased from 198 billion Thai baht in 2024 to more than 209 billion Thai baht in first quarter this year, and we expect it to surpass 218 billion Thai baht by year end as more operating assets come. And also our EBITDA yield also improved significantly from 8.8% in the first quarter 2024 to 10% in the first quarter 2025, reflecting a 13.6% improvement. Our strong performance is being translated into the higher shareholder returns, as you will see for our dividend payment, which increased by 50% from 0.05 baht per share in 2023 to 0.075 baht per share for the operating performance of 2024, demonstrating our confidence in sustainable growth and cash flow visibility. Next, our hotel business continues to deliver strong, consistent growth, supported by our high-quality asset portfolio, premium positioning, and deep partnership with leading global hotel brands. Starting on the left, hotel revenue rose by 9% year-on-year from 3.33 billion in the first quarter 2024 to 3.6 billion in the first quarter this year. This growth is driven by the increased occupancy rate, the rate optimization, and contribution from the newly operating hotels. In terms of the EBITDA, we also saw a 7% increase, reaching 1,497 million Thai baht in the first quarter this year. Our EBITDA margin also improved from 42% to 44%, reflecting our stronger operating leverage and disciplined cost control. Looking at the RevPAR performance, AWC also outperformed the market with an 8% year-on-year increase, rising from 4,711 Thai baht to 5,072 Thai baht. This marks a 27% increase above the 2019, which is the pre-COVID level, and significantly ahead of the market's 2% growth. This momentum is expected to continue in 2025, and we also forecast hotel revenue to grow further from 12,264 million Thai baht in 2024, with the growth would be driven by two key drivers. First is the additional 1,349 room keys from the new operating properties. And second, the continued RevPAR uplift from our premium customer-focused strategies. At the bottom right, you will see the margin expansion across the key hotels. For example, the Melia Koh Samui also have the GOP margin improvement from 59% to 61%, and also EBITDA margin from 54% to 56%. Next. This slide would show our global brand alliance and high-quality portfolio, which also enable us to successfully capture the premium international demand across diverse geographic markets. Starting from the top, this table highlights our diversified geo mix, showcasing our ability to attract high-value international guests. In the first quarter 2025, the US contributed 13% of the hotel revenue, while the ADR grew 49% versus the first quarter 2019. The other key contributors also include China at 10% of the revenue with 4% ADR increase. Also, you will see that the UK and Germany each contributing 6% and have the ADR growth of 51% and 45% respectively. Also, for the Japan, South Korea, Singapore, Australia, those countries also showing the strong ADR momentum, ranging from 22% to 38%. This also reflects the effectiveness of our global partners' customer mobilization strength, helping drive the demand at higher price points well above 2019 or the pre-COVID levels. If you look at the performance by segment, our hotels continue to show consistent RevPAR growth across all locations. For example, Intercontinental Chiang Mai, the mapping also shows 56% RevPAR growth year-on-year. Inside by Melia, Bangkok Sukhumvit grew by 10%. Banyan Tree Krabi improved 13%, and Courtyard by Marriott Phuket Town achieved 26%. This breadth of performance reflects the strength of our portfolio across different positioning, from MICE destination and city hotels to luxury and regional properties. Another point would be on our strong market positioning. would also be further reflected in our revenue generation index or RGI. The entire portfolio achieved an RGI of 103, with the luxury resource achieved at 117, and Bangkok City properties at 119, reaffirming our access to the high-value customer segments and the pricing power in the prime locations. Next, on the leasing business. Our commercial and retail leasing business continues to show solid growth, driven by our strategy to repositioning the key properties into the lifestyle destinations. Starting on the top left, the leasing revenue grew by 60% year-on-year from 2,041 million Thai baht in the first quarter 2024 to 2,372 million Thai baht in the first quarter this year. This also reflects the increasing tenant demand and improved asset utilization across both retail and office segments. Also, the leasing EBITDA also rose by 17%, reaching 2,046 million Thai baht, with the EBITDA margin holding strong at 86%, up from 85% in the same period last year. This margin improvement highlights the operating leverage of our high-quality asset base and the cost efficiency. A key example of our successful repositioning is Asiatic, the riverfront destination, which we see a 27% increase in visitor traffic, rising from 15,000 to 20,000 people per day. This also validates our strategies of integrating lifestyle destinations into our retail properties. By July this year, we would also be launching the Jurassic experience that would also strengthen the positioning of the Asiatic, the riverfront destination, and potentially improve the visitor traffic further. At the bottom, you can see the strong performance from our repositioning of the Pantip properties. You would see that for the Pantip Lifestyle Hub, it achieved a remarkable 76% increase in occupancy rate and a 46% increase in the ARR when we compare year over year. And for the Pantip at Ngam Vung Wan, this property also recorded a 22% rise in the occupancy rate and 4% increase in the rent rate, reflecting the steady demand growth even in the more suburban areas. Together, these results emphasize how our leasing platform is benefiting from a targeted repositioning strategies, positioning our properties not just as places to shop, but as lifestyle destinations that would drive traffic, increase tenant engagement, and unlock higher yields. Next slide would showing about our asset stage transitioning strategies, and you will see the improvement of the EBITDA yield. Starting on the left, our portfolio's GAV grew from 198 billion Thai baht in the fourth quarter 2024 to 209 billion Thai baht in the first quarter 2025, reflecting a 5.4% increase quarter over quarter. Our EBITDA over the last 12 months also improved from 11.95 billion Thai baht to 12.42 billion Thai baht, representing 15% EBITDA growth contributed from the assets that are now operating. When we look deeper in the portfolio by asset stage, you will see that the movement is driving for the upside of the EBITDA proportion. The asset in the BAU stage also increased to 37,548 million Thai baht, generating the highest EBITDA yield of 14.3%. Assets in the ramp-up stage also grew to 24,292 million Thai baht with the EBITDA yield of 10.9%. And the repositioning assets expanded to 65,543 million Thai baht with EBITDA yield of 7.2%, showing the ongoing transformation into the productive years. You will see that for the asset under the ramp-up and repositioning stage, those would create the potential in order to generate the additional EBITDA in the near term, following the enhancement of the EBITDA yield and the completion of our repositioning strategies, as you will see in the other properties in our portfolio. The developing stage of the asset declined slightly, while the fair value gain proportion increased. Together, the strategy of the asset movement strategies through the development, ramp-up, repositioning is what enable us to unlock the EBITDA value. On the right, we also highlight the specific projects contributing to the EBITDA uplift in 2025, including the Pattaya Marriott Resort and Spa, Jurassic World experience that I just mentioned previously, and another property, the Fairmont Bangkok Sukhumvit, which we also expected to open by the fourth quarter this year. Together, it would expect to contribute 6,912 million Thai baht as they become operating assets this year. In addition, the Jubilee Prestige Tower, which we are in the stage of repositioning from our acquired properties of the Swiss Hotel, also projected to add 4,450 million Thai baht starting from the second quarter. And also the Melia Pattaya Hotel would contribute 2,098 million Thai baht from January this year. Next on the portfolio growth. The portfolio growth, this slide also illustrates the remarkable expansion of our AWC asset base and hospitality platform. You will see that the GAV at the top, we have more than double the total GAV from 96,460 million Thai baht in 2019 to the projected more than 218,000 million Thai baht in 2025. This growth is underpinned by a disciplined investment strategy and the strong development capabilities. And you will see that the consistent upward trajectory in the operating assets from 83 billion Thai baht in 2019 to 161 billion Thai baht in the first quarter this year, with a significant share still in the pipeline under development. And looking ahead to 2029, our total GAV is expected to reach 300,000 million Thai baht, supported by the launch of many iconic mixed-use and hospitality projects, including the Plaza Atini Nobu Hotel and Spa in New York and Bangkok. Also, the Ritz-Carlton Bangkok, the Riverside, Vern Nakhon Kasem, Yaowarat, the Imperial Golden Triangle in Chiang Rai, and several other world-class destinations, including Kimpton Hue Hin and Okura Prestige to Sukhumvit. Moving to the bottom half, our hospitality portfolio has also expanded significantly, with the number of hotel rooms growing from 3,432 keys in 2019 to an expected 7,253 keys by end of this year, and ultimately reaching 11,908 keys by 2029. This reflects a more than double increase in the number of keys, driven by the new openings of the hotel properties, including the properties that we mentioned, the Melia Pattaya, Pattaya Marriott Resort and Spa Jomtien Beach, the Fairmont Bangkok Sukhumvit, and JW Marriott Ratchadapisek. Next, I'll hand over to Khun Panit to walk you through the key milestone in the first quarter of 2025.
Yes, thank you, Khun Marut, and thank you everybody to join the event with us today. So I will start with our key development in the first quarter. We just opened the Melia Pattaya Hotel, Thailand in the first quarter of this year, and this hotel is the first property under AWC that located in the eastern coast of Thailand, and we see the potential of Pattaya to be a famous landmark destination going forward. To attract the high quality customer in our properties. Actually, we bought this property 3 years ago, the Grand Soleil Pattaya, and then we developed a new branding to be the Melia Pattaya Hotel Thailand to add our portfolios. Actually, if we look at our total portfolio, we already have 3 Melia brand hotel under our portfolios. In key destination, we have in Bangkok, inside Melia, and we have Melia Samui, we have Melia Chiang Mai, and we have now Melia Pattaya hotels. This hotel has 234 rooms that will serve to our customer. And the rate at the moment in the first quarter, we can call from our customer, we can get the ADR at around 3,500 baht per night. But we target to further enhance the ADR to more than 4,500 baht per night by the end of this year. Actually, on the book today, we see the rate jump up to almost 5,000 baht per night already at the end of this year. So it's very, positive and impressive price for Melia. And next will be the development on the Intercontinental Chiang Mai mapping, on the largest MICE hotel in the northern part of Thailand. We opened this property back in 2023, and we have seen a very good development for the hotel. As Khun Marut mentioned, the RevPAR of this property brought by 56% year on year. And this is another development of the hotels. We just opened the Intercontinental Club Lounge and the Ice Spa. This is not only to enhance, the proposition of the hotel, but to link the high quality customer to provide more facility to our luxury customer. And we see the great, feedback from the customer after we launching these 2 new development. We have seen the room revenues increase. We're tracking during the Songkran period. We see, the room revenue increased by 16%. So that means, by adding this kind of the facilities into our properties, that will help to, attract more quality customer into our properties. And the third one will be the development on our retail property, Gateway Kamai. Actually, we think Gateway Kamai has a very good potentials on their, prime locations, located on the Sukhumvit Road and close to the public transportation linked to the BTS. So we think the performance of the Gateway can be further pushed in the future. That's why we push Gateway Kamai into the repositioning asset stage. As Khun Marut mentioned, we have the ramp up stage, we have repositioning, and then we have the BAU. So for any assets under our portfolio, if we think that we can repositioning them and to do kind of the asset enhancement investment into the property to enhance the EBITDA yield. So we were going to do that very soon. And this is one of the example that we put the new food lounge into Gateway Kamai to to bring in more customer and more traffic into the properties. So we compare the occupancy rate of Gateway Kamai in the first quarter of this year with the last quarter of 2024. we have seen the increase of the occupancy rate by 5%. So we think going forward, to do this kind of thing will help us to, to accelerate the potential performance of our assets under the portfolios. So next will be the, I think will be the strategic investment under AWC. This is the Work Nakhon Kasem Yawarat. It is one of our mega project under AWC. Total project cost is around 17 billion Thai baht, inclusive of the acquisition and the development cost. So Work Nakhon Kasem Yawarat will be the mixed-use project located in the center of the Chinatown, Bangkok, and we plan to open 2 luxury hotels. The first one is the Intercontinental Hotel with the 300 rooms, and another hotel will be a luxury hotel comprising of 200 rooms. So together 500 rooms. So we think Thailand, especially Bangkok, we are now facing with the challenge. Some may say that there is no new things to do in Bangkok or something like that, but for AWC, that's why we are trying to create this kind of new thing to Bangkok, not only for our properties, but for the interest of our countries. Work Nakhon Kasem Yawarat is one of the examples that we are trying to create, the attractiveness of our Chinatown to bring in the quality customer into Bangkok and Thailand. So this project will be developed and opened in 2029. And next. Okay, this is the acquisition of the Le Concorde Tower that Khun Marut already mentioned. There are 2 parts under this property. One is the Swiss Hotel, Le Concorde Rashada, and another one is the commercial buildings. For the hotels, we already signed the HMA agreement with the Marriott to rebranding to be the JW Marriott, which this property will be the first 5-star and luxury hotel on the Rashada Pisek Road. The area of this property at the moment is around 2,500 baht per night. But after the renovations and the development that we plan to fully open in 2028, we think we can further double the area of these properties. Actually, the locations of the Rashada Pisek is linked with the public transportation. We have the underground train and close to the shopping center on Pram Kao areas and close to the some of the economics and business center. So that means in the future, after we already repositioning and rebranding and open in 2028, this property can further give us a good return and a very good rate for the whole AWC portfolios. And also this is another highlight in the first quarter that we was named as the Thailand Top Corporate Brand 2024 with the total brand value of around 53 billion Thai baht. And that recognized proven our track record in the successfully development in quality projects in Thailand and in key destinations across the country. So I will pass back to Khun Marut on the growth focus strategies.
Yes, we have 2 parts. The growth that would drive the long-term value and the part of the strength that would drive our top business performance. Let us walk you through the growth first. This slide highlights how AWC's long-term growth is fueled by a robust and diversified development pipeline. We have development pipeline, the growth in the 3 horizons. First is the long-term growth. At the top, we have strategic projects with the high value creation potential, representing an investment pipeline of 42,966 million Thai baht. This includes Work Nakhon Kasem, Yawarat, Plaza Ethnie Nobu Hotel and Spa, New York, the Okura Prestige, Sukhumvit, Bangkok, Asiatic 2.2, Aquatic, Pattaya. These landmark developments will enhance our positioning in the global luxury and the lifestyle segment while contributing significant recurring income once it becomes operational. Second, the medium-term growth. We see a development pipeline in the value of 47,807 million Thai baht, totaling 1,688 keys and over 11,000 square meters of net leasable areas. This include Fairmont Bangkok, Kimpton Hua Hin, Plaza Ethnie Nobu Hotel and Spa Bangkok, the Ritz-Carlton Bangkok, the Riverside, Marriott Jomtien Beach, Intercontinental and Kimpton Golden Triangle at Chiang Rai. These assets are expected to transition into the operational stage from 2025 onwards, contributing directly to the EBITDA growth and strengthening our hospitality leadership. Third is the near-term growth. At the bottom, we highlight our operating assets, totaling 161,567 million Thai baht, which serve as the engine for EBITDA generation. This also includes the recently ramped up properties and also the other properties that already become the BAU assets, including the Inside by Melia Bangkok Sukhumvit, Melia Pattaya, the West in Sireh Bay Resort and Spa Phuket, which in the near future would be renovated and repositioning into the Ritz-Carlton Phuket, Intercontinental Chiang Mai, the mapping, and other lifestyle destination projects such as Phoenix and Aya Rooftop. Together, these assets are already delivering strong return and support near-term cash flow growth. Lastly, on the right, the previous slide, you will see the result of this focused development strategy. In that 94% increase in operating asset value since 2019, equivalent to 78,256 million Thai baht. This shows the success of our long-term investment discipline and our ability to build future growth for AWC's portfolio. Next slide. This would show the strong hotel development pipeline, reflecting our long-term commitment to expand a high-quality hospitality portfolio in the Thailand's key tourist destinations. As of 2024, we operate 6,029 room keys, with this number expected to nearly double to 11,908 keys by 2029, showing our sustained expansion strategy over the next 5 years. If you see for the pipeline in 2025, we already mentioned, it would also include the Melia Pattaya, Pattaya Marriott Resort and Spa, Fairmont Bangkok Sukhumvit, JW Marriott Hotel Bangkok Ratchadapisex, and 2026 it would be adding 671 rooms. 2027 adding 309 rooms. 2028 to 2029, the long-term strategic projects would become operational. That would also include the Banyan Tree Jomtien Pattaya, Okura Resort Chiang Mai, Okura Prestige Sukhumvit Bangkok, Intercontinental Bangkok Chinatown, which also part of the Work Nakhon Kasem Yawarat, and also the other luxury hotels that would also located within the Work Nakhon Kasem Yawarat. The next slide would highlight our differentiated growth model, driven by a freehold portfolio and strong internal development capabilities that create long-term value at competitive costs. Starting on the left, our freehold advantage. you will see that over 90% of our asset base is freehold, which also provide us with the superior asset competitiveness through the long-term control and flexibility for enhancement. We also have the stronger cost control with no lease renewal exposure, and also greater capital efficiency as depreciation impacts do not affect the liquidity. This structure also allows us to invest in upgrading, repositioning the asset, and extract more value over time without the recurring lease cost escalation. In the center, this is also interesting. We showed our development capability to repositioning the property that would create the revenue growth. On average, we have achieved more than 335% ADR growth compared to the pre-development levels. You can see the specific examples. The Intercontinental Chiang Mai, the mapping, we have the ADR increase more than 376%, while we invest only 25% cost of the value of the properties. Or the Courtyard Phuket and Melia Chiang Mai also show similar exceptional value creation with 463% and 601% of the ADR growth. This clearly shows our ability to unlock upside efficiently by upgrading, enhancing the asset positioning. On the right, we also would like to highlight our competitive development costs. Our development execution remains the cost efficient. You will see that, for example, the Bangkok Marriott Marquis, it was completed at 18,189 baht per square meter, representing a 39 to 55% increase cost savings versus the market average of 30,000 to 40,000 Thai baht per square meter. The next slide would show how the AWC Growth Fund would serve as a strategic investment platform in order to accelerate the long-term value creation while maintaining the capital efficiency and development flexibility. The AWC Growth Fund particularly serve many strategic investment. You will see from this slide that would include the Plaza Attorney Nobu Hotel and Spa New York, the Work Nakhon Kasem Yawarat, the Okura Prestige Sukhumvit Bangkok, and the Lanatic Destination in Chiang Mai. These are the large-scale strategic developments that benefit from this stage investment approach. When we look at the benefits of AWC Growth Fund, it enhances the development capabilities. This platform allows AWC to expand our development reach without overextending capital resources, and also be able to lock in acquisition price. We ensure that the project upfront, capturing the full upside from development gains while mitigating future valuation risk. Another benefit would be on the flexible timing for consolidation. We have the flexibility to time the acquisition when cash flow stabilize, optimizing the EBITDA and balance sheet impact to AWC. And last but not least, this model also reduces the debt burden at AWC level. During the development, the funding and the risk remain ring-fenced within the fund, helping to maintain AWC gearing discipline and financial resilience. Next slide would be showing on the financial strength.
Yes, thank you, Khun Marut. So what Khun Marut already mentioned is about our key strength to drive our business performance and growth. So next will be our strategy to drive further growth and in the last 5 years since IPO, we built a huge growth, and in the next 5 years, we also want to drive a huge growth in futures. So one of the key strategies to partner with the hotel chains. We are now partnering with the 8 hotel chains under our portfolios, which are combination together. They have more than 650 million loyalty members. So if we consider this number comparing with the 400 loyalty member in 2019, it is more than 60% growth, and it is not only the large size of customer base that they can bring in their quality customer into our hotel portfolios, but in terms of the cost saving, at the moment, if we look at the direct booking of our hotels, it is 70%. So comparing with 2019, 2020, at that time we have the direct booking at around 50 to 60%. So the direct booking is not, it's not only support us in terms of the bring in customer, but also the cost saving for AWC, to pay commission to the third party will be increased. So we have a good quality customer into portfolios, and natural of the loyalty members or loyalty customer will spend 1 to 5 to 2 times comparing with with the other types of walk-in customer into the hotels. So they also would like to take a rest, stay in our hotels. They want to do a spa. They want to go to the hotel's F&B. So that is not only not to bring in the room revenues, but other F&B revenues or other facility revenues will be increased. It's not only the partner with the hotel chains, but in terms of our retail business, Asiatic is one of the example that we would like to highlight. If we back to 2019, Asiatic is one of the famous, tourist destination of Bangkok, and it still be at the moment. But what we want to do is that we want to add something new, add new experience to our, visitors. More than 70% of Asiatic visitor is international visitors, and the rest 30% is local visitors. And we want to create new experience to the properties. And Jurassic World will be opened July of this year. And we think that after opening the Jurassic World, that we create more traffic into Asiatic. And we want to say the occupancy rate of Asiatic at the moment around 77% as of the first quarter of this year. And we think the occupancy rate will be drive up to 85% within the year end. So I think this is the key development of AWC. So next I will hand over back to Khun Marut for the summary.
I think that would be the other top business performance that we can elaborate and we can share further details to you later. We hope today you would gain the clear view of the AWC strong momentum and our commitment to the long-term value creation. At AWC, we believe that the sustainable growth is not only about performance, but also about the purpose. Through the high quality, resilient, and the future-ready portfolio, we are committed to building better future for all stakeholders. And for today, we greatly appreciate your time and interest in Asset World Corporation. If you have any further questions or comments, suggestions, our IR team is ready to provide you additional information or arrange one-on-one follow-ups. Thank you once again, and we look forward to the opportunity to grow together. Thank you very much.